Hi students, welcome to Sunil's tutorial. I'm Sunil Melwani and today we will be doing this chapter called as personal investment, or it is also called as investment account. What is investment accounting? In investment accounting, you have purchased certain investments. Now investments are, when you have invested in investments, you get returns on the investment, and at the end of which you will sell your investments. We are here to find out in this chapter how much will your profit or loss be on an investment that you have purchased and sold. Right? Let's see this. We are doing illustration 1. We are doing illustration 1 in the books of, we are saying on 1st Jan 1012% debentures were held by Messrs. Shiva of Shiva Limited, were held by Mr. Dharmesh. So in the books of Dharmesh, guys, you need a double page. In the books of Dharmesh, 12% debentures account, investment in 12% debentures of Shiva Limited. Right? For the year ending, last line, 31st December 2004. For the year ending 31st December 04. Right? Date, particulars, working note, nominal value, income, capital, date, particulars. So this will be your entire debit side. Particulars, working note, nominal value, income, capital. Right? Right, let's start with the sum, guys. Now, they've said that on 1st Jan, 1012% debentures of 100 each of Shiva Limited were held as investment by Dharmesh at a cost of 91,000. Interest is payable on 31st December. Guys, let's see the working note. Working note 1. You have to first always find out when is the interest payable. So, interest is payable on 31st December. Right? Let's start with the sum. On 1st Jan 2004, 1st Jan, debit what comes in, opening balance of asset comes on the debit side. On 1st Jan, 1012% debentures were held. So, to balance brought down, 1000 debentures of 100 each. If 1000 debentures of 100 each, that means the face value will be 1 lakh. 1000 debentures of 100 each, that means the face value will be 1 lakh, right? Were held as investment by Mr. Dharmesh at a cost of 91,000. Cost is given to you as 91,000. Okay. Now, working note 2. Interest on 1st Jan. How do you calculate interest? Interest is nothing but your nominal value, that is 1 lakh. Rate of interest is 12%, and from this date move to the closest previous date. Your closest previous date is 31st December. You paid interest on 31st December. Now how much is the time gap between 31st December and 1st Jan? 0 months. So the interest is going to be nil. Fine, do we get this thing clear? So that's my opening balance. Now on 1st April, 20,000 debentures were purchased. Debit what comes in? 1st April, purchase to bank. 20,000 debentures were purchased by Dharmesh 20,000 debentures were purchased by Dharmesh at 98 come interest. Okay, let's see the working note for this, guys. Working note 3. Interest on 1st April. You have purchased 20,000 worth debentures. The rate of interest is 12%. Now, between 1st Jan and 1st April, 3 months. So 3 by 12. So this will be 200 rupees. No, 600 rupees. Right? Now, you have purchased 20,000 worth debentures. The face value of each debenture is 100 rupees. So the number of debentures that you purchased are 200. Okay, 20,000 worth debentures. Face value of each debenture is 100 rupees. So that means you must have purchased 200 debentures. So in that case, I can say that the capital value, I have purchased 200 debentures at 98. They are saying that the debentures are purchased at 98. So 0, 0, 8 to the 16, 8, 9 to the 19,600. Right? Now since it is come interest, Hindi translation of the word come, less. When they say come interest, you less the interest. Interest 600, that means you have purchased at 19,000. Fine, do you get this thing here? So in that case, your capital value is 19,000 and the interest is 600 rupees. Simple, straightforward, right? Next. On 1st September, 30,000 such debentures were sold at X interest. Sold. Debit what comes in, credit what goes out. 2004. 1st September by bank. How much? They are saying that 30,000 such debentures were sold. So face value is 30,000. Let's calculate the interest first. Working note 4. Interest on 1st September. You have debentures of 30,000 face value and these are 12% debentures from 31st December to 1st September. That's from 1st Jan to 1st September is 9 months. 2700. So the interest is going to be 2700. Now these are X interest. Now if these are 30,000 worth debentures, each debenture is of 100 rupees.
8 months.
So 8 months.
8 months.
Okay.
8 months. So in that case, 2400. Okay. Now, if I have 30,000 worth debentures, that means, and each debenture is of 100 rupees, that means I have purchased 300 debentures. If I have purchased 300 debentures, then what will the capital value be? I have purchased 300 debentures at what price? At 96 rupees. 28,800. Since this is X interest, I don't have to do anything about interest here. Right? Record the transaction. 2,400 and 28,800. Right? Do we get this thing clear? So you have sold, on the credit side you made an entry. Now, working note 5. Whenever you sell, you have to find out the profit or loss on sale. How do you find that out? Guys, now see this. Look at your debit side. Before the date of sale, your date of sale is 1st September. What is the total face value of the investment that you have? The total face value is 1,20,000. So you have 1,20,000 worth investments. What is the capital value that you have for them? 91,000 and 19,000. That's 1,10,000. So you have purchased debentures of face value of 1,20,000 at a capital value of 1,10,000. Fine, do we get this thing clear? Now, you are selling debentures of 30,000. If you are selling debentures of 30,000, in that case, what should the expected selling price be? The expected selling price should be 30,000 into 1,10,000 divided by 1,20,000. Someone please get me the expected selling price. 30,000 into 27,500. Right? The expected selling price, what you get here is called as the expected selling price. The expected selling price should be 27,500. What is my actual selling price? The actual selling price is 28,800, right? So in that case, how much loss have you incurred? 1,300. You have incurred a loss of 1,300.
Profit.
Sorry, expected selling price, profit. You have made a profit of 1,300, right? You sold for 28,800, where you should have sold for 27,500, right? You made a profit. In that case, on 1st September, you will record this as to profit and loss. Amount is 1,300, right? Okay, let's move on ahead. On 1st December, 50,000 such debentures were sold at 99 cum interest. Sold. Debit what comes in, credit what goes out. On 1st December you sold them by bank. You have sold 50,000 worth debentures, right? You have sold 50,000 worth debentures. Let's find out the interest on this. Working note 6. Interest on 1st December. You have sold 50,000 worth debentures, 12%, right? 1st December, that means 11 months, 5,500 if I'm not mistaken, right? The interest is going to be 5,500. Someone cross check please.
Yes, sir.
Right? Once you have this, let's find out the capital value. You are selling 50,000 worth debentures. That means you are selling the debenture, you are selling 500 debentures. Each debenture of 100 rupees, you are selling them at 99 rupees.
What 500?
50,000 each debentures of 100 rupees. So how many debentures am I selling? 500. Right?
45,000.
This is
No.
45,500. Someone please cross check this. Someone please cross check this.
No, 49,000.
49,500.
Yes, sir.
Right? Once you have this, now let's see, since this is cum interest means I should less the interest. So if I less interest 5,500, that means that will give me 41,000. 44,000, sorry. 44,000, right? Now, interest is 5,500 and capital value is 44,000. Fine, do we get this thing clear? Now once you've done this, working note 7. Let's find out the profit. Nominal value, capital. Right? Before the date of sale, your date of sale is 1st December. Before the date of sale, how much have you purchased? 1,20,000. Out of that, before the date of sale, you had sold 30,000. So 1,20,000 minus 30,000, that means you have 90,000 worth face value of investments with you. At what price had you purchased? Someone please add this. 91,000 plus 19,000, that's 1,10,000 minus 28,800. Minus 28,800. 1,11,300 minus 28,800. 1,11,300 minus 28,800 comes to 82,500. Fine, do we get this thing clear? Now, you have sold investments of 50,000. You have sold investments of 50,000. In that case, what should your expected selling price be? Your expected selling price should be 50,000 into 82,500 divided by 90,000. 50,000 into 82,500 divided by 90,000. 45833. It should be 45,833. That should be your expected selling price. Your actual selling price, how much did you sell it for? 44,000. So how much loss have you incurred? 1833. You made a loss of 1833, right? This you will write here 1st December by P&L 1833. Fine, do we get this thing clear? Okay, next. Okay, now on 31st December, we have made the interest due. On 31st December, I have to receive the interest first. 31st December, by balance carry down. Now, let's see this. I have 1,20,000. Right? I have 1,20,000. Right? Out of which I have finished selling 80,000. That means I have 1,20,000. Right? That means your balance is 80,000. No, 40,000.
40,000.
Your balance is 40,000. Right? Once you have 1,20,000 minus 80,000, balance is 40,000. Let's calculate the interest. Working out 7, interest payable on 31st December. Interest payable on 31st December is 40,000 into 12% into for the whole year, because the last interest that you paid was, or you received was on 31st December. So you have
4,800.
4,800. This interest is finally going to be paid to you. So on 31st December, you will have by bank the interest payment of 4,800. Right? Since interest is already paid to you on 31st December, you cannot have interest due on 31st December. आज ही मैंने तुम्हें इंटरेस्ट दिया, आज वापस थोड़ी इंटरेस्ट ड्यू हो जाएगा. I have paid you interest on 31st December. Interest cannot be due on 31st December again. Okay. Let's tally the capital account. This is 1,11,300. This is 1,11,300. Right? Someone please subtract that. The difference I presume is 36,667. 36,667. Someone check this. Right? Now, at the credit side of income side,
12,700.
12,700. Right? Write this here, 12,700. The difference is going to be written as 31st December to P&L. The difference is going to be 12,100. Right. This finishes this sum. We'll stop here for the day. Thank you very much.